All right, welcome everybody. Thank you for being with us today. We are broadcasting live from Tampa, Florida. And where are you again, Steve?
I'm in Scottsdale, Arizona.
Scottsdale, Arizona. So thank you all for being here today and joining us on this lovely day. It's always lovely in Scottsdale. It happens to be lovely in Tampa. So for the record, we are recording this and we're going to be posting the recording to the Family Office Insights YouTube channel. So if you care to review anything, or for example, if there's anybody that after hearing this you think could benefit from hearing more about it or being in touch with Steve, reviewing the recording, you're more than welcome to do that, and we encourage it, of course. We also welcome any and all questions. We have a lot of people that will be coming on today, but we'll be getting to them as we go along, as many as possible. So don't hesitate if something comes to mind to put it in the chat box or the Q&A section, which you're all too familiar with now with the Zoom going on for months and months. I hope many of you have been able to get out and go to a restaurant and enjoy a little lifting of the pandemic constraints. We certainly have been able to do it here and in Florida. And I was in Scottsdale actually 6 months ago, and it was totally fine, which is good to hear. So we are welcoming Steve today, and through some good DNA, I like to put it that way. He was strongly referred in to one of our colleagues and friends, and so we're super excited to have him and talk about his business. He's a seasoned executive and CEO. He'll tell you a little bit more about his background, but not only is there an opportunity to participate as an investor in his company that's making money presently, but potential business development if it strikes you in that way, or if you know anybody that might benefit from his business. Again, please feel free to ask anything in the Q&A or the chat box, and we'll get to as many of your questions as possible, and don't be shy. So with that, Steve, welcome. Thank you for being here today.
Arthur, I appreciate you having me, and welcome everybody. Good afternoon. While we're still waiting for some people to jump on, I will just kind of give a little background of myself. Once again, my name is Steve Taplin, and I'm the CEO of Sonatafy Technology. I live in Scottsdale, Arizona. And throughout my career, I have had stints. I've always been in the technology and the private equity space. I have spent time at both IBM and DXC Technology, focusing on leadership, business development. I also, for 13 years, I ran my own niche private equity firm that was focused around buying up businesses where we can infuse technology to make them run more efficiently, give them a great boost on sales and marketing, and look at exits on those in 3 to 5 year periods. So as we're still having people jump on here, once again, I'm in Scottsdale, Arizona. Sonatafy Technology, we are a Nevada company. We have offices throughout the US and through Latin America, and we are a nearshore software development firm. And I see a few things coming through on the chat. And why don't I go ahead and get started here?
I'm sorry, Steve, that's me doing that. So I'll monitor the chat.
Okay, I appreciate it. With that said, I'm honored to be talking with everyone today. I know your time is valuable. I know we all are going through Zoom fatigue. And so I will make sure to be informative and not boring. That's my goal here. So I'm going to jump in and give some background here on Sonatafy Technology. Just a quick disclaimer on this. I'll just keep this up here for 10 seconds. We've all seen it. All right, we'll keep going. So who is Sonatafy? So Sonatafy Technology, we are an established software development company that focuses on providing nearshore software development for US-based resources. And our company has actually been around since 2005. Our previous focus was providing software developers and engineers out of Asia Pacific to US businesses. And in 2015, we switched gears, having the foresight to see the shifts in the nearshore software market, as it is often referred to. And we've been focused on Latin America since 2015 moving forward. We have a very solid leadership team throughout the company, and we'll talk about what we've been able to do. I joined the company about a year ago now as CEO and partner. As I mentioned, Sonatafy Technology was an existing firm that was run by our primary founder. His name is David Turner. David is an extraordinarily talented tech entrepreneur, has had many successful ventures, and our company was actually started back in 2005 when David was looking for software developers and engineers for one of his companies. And he ended up not being happy with the talent he was able to find, and he had very strong contacts throughout Asia Pacific. And that's really how Sonatafy was born, was through that need that David had. And when I mentioned that the company switched gears in 2015 to focus on nearshore software development, within that time, David, as the lead partner, had some very big exits on some of his existing businesses, where he wasn't able to give the focus to Sonatafy, kind of had it running itself for the past couple of years. And that's where it was great when David and I met. It was the right fit, where I could come in, take my experience with large tech, with private equity, with entrepreneurship, really tighten up our system, our operations, from our financial systems and reporting to our operations, and how we have processes in place through technology to make sure the company doesn't miss a beat and we're not relying on any team member remembering what to do, that we have systems doing that. And so over the past year, we have our projected revenue growth is over 194%. And our current sales pipeline, we have over 17 million in active pipeline today. And with our business and with nearshore software development, one of the biggest challenges going on in the marketplace is companies are trying to find software talent. Many projects were on hold as COVID started. And as things have picked back up with these companies, in the US, it is very hard to get talent and keep talent. The average software developer out of college, fully burdened cost, with no experience, is anywhere from 90 to 120,000 a year, depending on where they're located. And then as those developers get experience, they want to be promoted very quickly, because in this world of software development, once you have 3 to 5 years experience in a newer technology, that's considered senior, as technologies are constantly evolving and changing. And so many companies have projects, they have their core software teams, but they're looking for an additional talent to be able to handle their backlog of items to address in their custom software development, for expanding their teams, for growing quicker, faster. And that's where Sonatafy comes in, is we have those resources available. And our typical model is to do a staff augmentation model with firms, where we're augmenting existing teams, anywhere from 5 to 30 plus software developers and engineers. With our business and what we're doing, we have received a lot of good accolades in the industry. We probably are contacted anywhere from 2 to 3 times a month from private equity firms, from global IT firms, with offers to purchase us. And we get a lot of offers for tuck-in acquisitions, a lot of offers to be from global firms to be part of their portfolio and use our nearshore Latin America component. And we don't have interest in that at all. We're excited with our business, with the machine we've created, with the momentum we have, where we think we can grow this company to 50 to 80 million of revenues without large private equity type firms. And that is what leads us to the conversation today. So our ask, what we're focused on. We have a phase one capital raise of $3 million. This $3 million is focused on growing our organization, building out our technology suite further. Excuse me. And to be clear, our company has been around since 2005 when we started in Asia Pacific. The original founders and investors saw a 32x times return on their investment. The company switched gears with changing markets in 2015 to focus on Latin America. And we've been working through the challenges of being able to grow in Latin America and get established and deal with government regulations. And we're just now turning a phase where our company is profitable. And so we're not relying on capital in order to thrive and keep going. We're looking to capitalize on this momentum, on this 194% growth that we're having, which we think we can continue. And so this phase one, $3 million of capital is focused around growing our sales and marketing efforts. And then we have a phase two, which we actually expect to happen sooner rather than later. And I say within the next 6 to 12 months. We do have 4 specific companies that we're in conversations with for us to acquire. 2 of them are nearshore software development companies such as ours. These are ones that do not have US-based management and have a good set of engineers and some good client bases. We also have 2 different software as a service companies that we're targeting, where they're looking for help both on the technology side as well as on the leadership side. And we're seeing a lot of things with software as a service companies, as I'm sure many are seeing, where a company will have a great product, but the leadership doesn't really understand how to sell software as a service. They go in what I'll call whale hunting and going into large clients and saying we'll do these big custom solutions instead of rolling things out feature by feature like the typical SaaS model. So that's kind of a summary of our capital raise, phase 1 and phase 2 of what we're focused on. Currently, capital in our business is from founders and a small number of family and friends. So we don't have any private equity firms or institutional capital at this time. And that is, we're looking to be very select with the type of investors we bring on moving forward, making sure they're aligned with our goals. So I told you our company's been around since 2005. So why now? Why are we here asking for and looking to do a capital raise on this existing business that has had great returns in the past, that we have built up a strong infrastructure in Latin America? And why now is largely deemed towards what the COVID pandemic did for the software development industry. In the software development world, people who were out of country did not typically work from home. Now, if you were US based, working from home has been very normal. But when you're outside of the US, and whether that is in India, the Philippines, Eastern Europe, which are some of the large IT outsourcing markets, or throughout Latin America, working from home really didn't happen much, if ever. And the COVID pandemic forced this and accelerated the move towards the distributed workforce and the work from home model. And it has now been widely accepted out of necessity for clients. And with that, there were a lot of our companies we work with are healthcare and life sciences companies and fintech companies, where we're meeting regulations around HIPAA, around PCI, around other various compliances. And we have been able to adapt with the work from home model to not only make sure we're in compliant with all the various regulations, but also that our team members are productive. They all have, we're very selective in the areas we go through to make sure that there's strong internet infrastructure so that our employees can productively work from home. And so this shift of the COVID pandemic, tied with another, the other kind of big shift in the industry, has been that the desire for US-based teams to have same time zone support. And let me explain that. If you're a software development team in the US, it has been very common to supplement your team or outsource certain functions to countries such as India, Philippines, Eastern Europe, as I mentioned. And what that means for the US-based software teams is those employees, depending if they're on the East or West Coast, are typically working till about midnight US time so that they can have a few hours overlap with their offshore team. They go to bed, cross their fingers, hope everything was done when they wake up. And if it's not, they typically have to wait 8 hours to talk to those resources, and that starts again. Now, for a lot of IT related functions, a model like that is very efficient and works well. But in modern custom software development, enterprise applications, the need for constant collaboration is extremely important. And when a developer hits a point in their code, and if they can't bounce things off Slack or Zoom or get instant answers off people, it really inhibits their productivity on what they can do for the rest of that day. And so working nearshore, where you can have employees on the same time zone as US employees, but they're from another country, where you're getting the benefit of lower cost basis, has been a wildly growing trend over the past 5 years with companies both large and small. And so the combination of these factors with the work from home and the rise in nearshore has been is really what's driving why now with Sonatafy Technology. Arthur, I'm going to just do a pause with you and check if there's any questions that have come in or if I should keep going here.
Actually, yes, if you don't mind, what you just said, the advantages of nearshore. So I think that through your discussion, you define nearshore, but other than the same time zone, what are the other advantages of having nearshore or workers as opposed to others?
Sure. So with nearshore software development, and right now we have operations throughout Mexico and soon to be Argentina. And so we're dealing with countries that are fluent in English, both written and verbal. And from a cultural perspective, one of the nice things about nearshore resources, and I'll use Mexico for example, is in general, through Mexico and Latin America, the mentality of somebody working for a company is that they want to work for that company long term. They don't typically want to jump around to different positions and not have that stability. Where in markets such as India, where every large IT firm has set up shop, usually on the same street, and where they're known for very high turnover employees because an employee can get upset, go across the street to one of their competitors and get a job for another $1 an hour. And workers in offshore locations and such as India have phenomenal talent, good English speaking skills, but you're dealing with that different time zone, you're dealing with a higher attrition rate. And so that is one of the nice things about nearshore is English speaking, English, both written and verbal, and that same time zone support. And that mentality of goal of working with one company for a long term and not constantly jumping around.
Is the work ethic about the same in both jurisdictions?
I would say so. I think that skilled software developers everywhere are in high demand. And I think that in the software development world, there's so many milestones and that you need to meet, and how you're handling your activities, your sprints, how you're updating your team. I do think that there is a good hardworking effort through Latin America, but that I see that often offshore as well. The difference being is when you hit that pivot point of your coding an application and you need to know which way to go, and you don't have instant access to your team to collaborate, that could cause the rest of that work shift to not be as productive, because and in the software development world, there's 1,000 different directions, if not more, you can go with certain code and how you're doing things. And so from that perspective, and not having the ability to collaborate with their US counterparts as easily, that can lead to lower productivity.
Yeah, it's probably not a fair question, but have you been able to empirically support the amount of wasted time that occurs if you're not able to collaborate real time?
I would say that's probably one of the main reasons why companies are choosing to go nearshore or with a company like Sonatafy, is because for their team members in the US, and for their employees and their team members in Latin America that are working with them, they are able to be more productive. And let me expand on that a little bit. The number one challenge US companies have is they have these great, talented, high-priced software developers and engineers. And you got to be careful that you're not burning those people out. In the IT industry, in the software industry, working 12 plus hours a day is normal. But then when you have to start working late nights and you have that overlap, the satisfaction of the US-based software team members, we're seeing increase by very large levels by having that real-time, same time zone collaborative support.
And I'm just guessing this, Steve, but when you're working with an incumbent in-house tech team, even if they had an outsourced team already to augment what they're doing, is having the team in the same time zone less a threat to them as the incumbent, because they're not, having, the whole idea of it not being built here often is a threat to the existing team, right? So does this soften that blow a little bit doing it this way?
In normal times, I may say yes. I would say right now, every company, every software development team has more work than they can handle, and they're welcoming the help versus being threatened. And they're begging for the help based on what is going on right now. And so I definitely, and in different times, I have seen that more of an issue where they're feeling threatened and kind of holding on to things. Every business out there that's thriving is constantly focused on that custom user experience, whether it's through an application, through the phone, through the internet, through your computer, and customizing that unique experience. All developers have more work than they can handle. And so they're welcoming it, and they're just looking for ways to help them and their companies be more productive.
So I know you're probably going to get to it, but just on a macro level, is the delta, if there is anything, any delta at all between your group of software developers and Asia or in India, for example, is it about a push price wise? Are you a little bit more expensive just because? Is it how's that look generally?
Sure. And actually, we have an interesting tool we've built of an ROI calculator that looks at the cost of resources from Latin America, from India, and from the Philippines, as well as the US, and then looking at their rate card cost versus the other factors that lead, other KPIs that lead to their overall productivity. So dollar for dollar, I will say the resources in Latin America are slightly more expensive than what you'll see out of India or the Philippines. Some niches in Eastern Europe, we're seeing about the equivalent or sometimes slightly higher pricing. But most US-based businesses, they realize they're going to pay a little more premium for that same time zone support, but it still ends up being typically 50% of what the equivalent US FTE would cost.
Totally makes sense. So continue, Steve.
All right. So throughout our company, we have a very strong executive team. Our Chief Technology Officer, Eric Berkfeld, is one of the best software development CTOs that I've encountered in my 25+ year career. It's actually pretty fun watching him geek out with other CIOs and CTOs, brainstorm on strategies, on approaches to take. We have a very talented team throughout our executive team in the US, as well as our team through Mexico and Latin America. Our founders and myself have significant experience as technology executives, as entrepreneurs, with numerous successful exits. We do focus on our solution being client-centric. As I mentioned, we've seen enormous demand for nearshore software development. We've also seen that many companies have been very frustrated when they start with a company and they feel like they're a big fish in a little pond, and so many companies in our industry are being bought and having tuck-in acquisitions and being part of these larger firms. And it's actually sending a lot of clients our way because they are frustrated that they're not getting the same support that they're getting. Some interesting client examples of recent clients we've had. We actually had a private equity firm that was offering us a tuck-in acquisition, and we very politely said no, but they're like, you know, I need you to talk to our some of our portfolio companies who are looking in this area and struggling. And one of their companies specifically was already 95% done through an RFP to hire a very large nearshore team. And the only reason they even talked to me at that point was, and our company wasn't part of the initial RFP, was because their private equity firm said that they need to. And we were able to have a great conversation with the executive team, explain the pros and cons and how they should be careful on how they're structuring and intermediate teams. And this led to a phenomenal relationship where they were going to award the RFP to 4 different providers. Per my suggestion, they only awarded it to 2, and us being one of them. And that's been a great working relationship. We have other clients that one of them is a large Fortune 500 company that has been very happy with our services throughout Mexico. And we're in conversations that they want to consolidate all of their Mexico-based vendors with us for software development. We also provide IT help desk services for that client. We have another client that is part of the Nestle family of companies that we were able to reach out to. That company had only heard of nearshore development at that time and had not done it, but they were working all offshore. They felt, as I was going through the benefits of nearshore, they were shaking their heads. And that led to a very nice contract for Sonatafy Technology with a good brand label company. And it's been a great working relationship, staffing up the team and focused on their software development. With our clients really range across the board from smaller companies as small as 50 employees up to Fortune 500 companies. In general, and in the current environment, our target is typically companies between 50 and 10,000 people, where they're doing software development in-house. We have a wide range of industries we focus on. We're more specialized from a tech stack perspective, and all modern cloud environments, mobile environments are key parts of our services and what we do. Our average contract is typically doing a 12-month contract. It's typically a fixed price contract where there's recurring monthly revenue. Our renewal rate on clients is fantastic. In fact, almost every client we've had always renews with us, with the exception if they go out of business or if they went through recent merger and acquisition activity where their needs changed. So that has been fantastic. We have placed thousands of technical resources with clients, and our feedback on customer service is phenomenal, and that's very important to us. So wanted to, Arthur, if it's okay with you, take a step back and just kind of do a recap of who we are. These were also the question and answer sections that were part of the Peer Insights report that that your team has published. So just as a recap, and for those who might have joined a little late after we started, so our business model is focused around being a leading provider of nearshore software development services, focused all around cloud, web and mobile applications, e-commerce, big data, machine learning, and everything in between. As I mentioned, our average client engagement is 1 to 2+ years. A big part of our business is, and companies choosing to go the route towards a company like ours, is the nearshore versus offshore argument, and how that looks to those in-person teams as far as their productivity, their lifestyle, and their ability to get, making sure they don't get burnt out on their jobs. And so that's been a big part of who we are and what we've done. As I mentioned, the COVID pandemic has really been a thing to supercharge our business model. Prior to the COVID pandemic, Sonatafy had operational centers in various different locations that employees were going into. We went 100% virtual as part of the COVID protocols. And we see for the foreseeable future being able to maintain a virtual business model, with perhaps in the next 12 to 18 months, having some offices that are kind of hybrid mobility type offices. But how the distributed workforce has come into play as part of COVID has been a big driver for us. And why Sonatafy? We are an established and diversified company. I'll talk about some of our clients and the logos we have. Myself and a few others, I've been part of new company leadership over the past year, where we've tightened up operations, both financial and operationally. And with that, we do have our due diligence room that we have available, all of our financial statements. Everything about us is extraordinarily organized and what I would call institutional ready. And our current pipeline, regardless of the 194% year-over-year growth that we're looking at, we have over 17 million in our active pipeline. The executives and founders of our company do have extensive experience in growing and exiting businesses in the technology space. And our goal right now is to take advantage of the trends that are going on and grow the business with a few select investors, as opposed to large private equity or institutional investors, to grow to 50 to 80 million plus a year of revenues. Our company services are considered best of breed, from the SMB market to Fortune 1000 firms. We've worked with big new logo clients such as IBM and Cisco, TaylorMade, Caterpillar, clients large and small that we have worked with, where we have various projects that we've done for them on our website at sonatafy.com. We do have a lot of detailed case studies talking about the individual things on how we've helped clients and what we have done. So to briefly, again, talk about the history of our company, and I touched on this earlier, but just to show a visual. So the original company was called Sonata Services, and that was formed in 2005. It was founded by David Turner, who is a very successful, experienced tech entrepreneur out of San Diego. He founded the company when he had a need for quality software developers and engineers, and he couldn't find a company that he wanted to work with, and he ended up teaming up with some of our other founders to create the original entity to focus on software developers out of Asia Pacific. That was a very successful growing business. And then in 2015, based on government political alignment between the countries and the shift of software development resources gearing towards the nearshore model, is why in 2015 the company switched gears to Latin America. The nice thing about now the 6 years of operating experience we have in Latin America is it is a unique market from a employee perspective, from a government regulation and tax perspective. And it's an environment that we have successfully operated in now for over 6 years. And I would challenge other companies, if they've never operated in those environments, that they're going to have some severe growing challenges and pains adapting to the regulations, the environment, the employee rights. And so that gives us a very nice edge. I joined the company last year. It's been almost a year now as president and CEO and partner in the firm. As I mentioned earlier, I do have a very strong track record in the technology and private equity space, both large companies, IBM and DXC Technologies, as well as my own niche private equity firm that I ran for 13 years. When I came aboard, we rebranded the company from Sonata Services to Sonatafy Technology. As we're rolling into this year, last year, I was focused on institutionalizing the company, the process, the financials, the operations, and most importantly, growing the pipeline. Fast forward to now, we have our initial $3 million investment offering, our phase one, with our phase two of $8 million for acquisitions here shortly after. So that's just kind of a overview and timeline here of the company and how it's evolved.
Great. Steve, couple questions, okay?
Yes.
So one is the question about competitors. Who do you see as your competitors?
So in the nearshore software space, we often see ourselves competing primarily from 5 to 10 different firms, with the largest firms in this space having a couple thousand employees, where some of the mid-sized firms are from the 100 to 300 range. And but we are running into the similar companies from a competition perspective. They're not household names that you would think of, such as an IBM or a DXC Technology. They're niche companies that have had the focus of nearshore software developers to US-based businesses.
And what about the, you mentioned the difficulty from a regulatory perspective of recruiting and employing people in Latin America and Mexico. How's the sourcing of staff and recruitment is the, in the US, there's, a huge problem getting back to post-COVID normalcy with employees. Does he have the same problem there in Latin America and Mexico, for example?
The interesting thing with our markets in Mexico and Latin America is these are people who never had the opportunity to work from home. They would always have to commute, whether it was 20 minutes or 2 hours, to and from an office every day and back. And they were hardworking then, and they're even harder working now. And it's neat how much they appreciate the work from home environment. In the US, we've been spoiled. We've been doing that for a long time. But our engineers are ones who rarely had the chance, if ever, to work from home. And so from an employee satisfaction perspective, we're seeing them happy as can be. They're more productive at work. They get more time with their families. They have more time to do personal things that they need to do. From a recruiting and retainment perspective, I kind of joke, you do it wrong enough, long enough, and you figure out how to do it right. And throughout Latin America, we've become now known as a positive company to work for. Our talent recruitment team, we are constantly recruiting software developers and engineers in about 15 different technologies where our focuses are, once again, around cloud, mobile-based technologies. And at any given time, for any position, we typically have over 100 candidates somewhere in our funnel or queue. When people come in, they're evaluated based on their resume and their profile. We do an English proficiency test, both written and verbal. If they get through that, we administer a coding test. Candidates have to get at least an 86% on the coding test to be considered. Then we do panel interviews, and we've gone through this process to help get people that are going to fit our culture. And most importantly, the culture of and the expectations of US-based clients. And a lot of our clients give us the feedback that because we do have US-based management that has been involved in the IT industry for many decades, we understand the expectations that they have, and we're able to groom our engineers for that, and also be able to step in and help when, not if, but when there's challenges and how you work through them. So that's been a very positive thing for us.
Do you have a sense that you'll be able to satisfy the talent needs of your pipeline, based on your estimated engagement of that pipeline?
So the answer is yes. I am very confident in that. And if anything, we kind of gauge our sales efforts and our marketing efforts to make sure we're always able to keep up. We have been on a path, and our company size with current team members in the US and throughout Latin America, we are right around 75 employees, and we are growing at a pace of 20 plus employees a month. And our recruiting, so with that and our recruiting machine and our pipeline, we are able to balance that closely to and demand versus supply. And of course, there's always challenges to work through. And I joke, you don't do great in business and have great relationships because everything always goes perfect, because that's not the real world. And my job as CEO is to solve challenges, and that's what I do. And in fact, our best client relationships, both from Sonatafy Technology and from my other ventures, my best longest term relationships are not because everything went perfect. It's because when things went wrong, how myself and the team focused on solving the problem and making it right is what leads to those long-term relationships.
Yeah, no doubt. So what's the investment look like? Is it a convertible, a safe, straight equity?
So the investment itself is an equity investment as far as what we're proposing. And we have it structured where there is a preferred distribution for all profits until the original capital is returned to the investors. My investment banking team actually yelled at me that it's too generous as far as what we're doing. But with that said, it's a model that is very attractive for the investors. It puts them at the forefront of and getting the majority of profits until they at least get their initial capital back. And then it flips to profits based on the equity of the company. And both myself and my partner, David, have done this structure before, and we think it's a great way to have a win-win and to align everybody's interest towards the longer term goal.
And can you share with us how far along on this raise you are, if at all? I know that I'm pretty sure you just started, but.
We did. We actually just rolled out the initial raise and have a PPM document for that and have our investment banking firm, Rock Fleet Financial, that is running that structure for us. And so we're right in the beginning stages of it. And so we are having conversations with numerous investors at all different stages. As far as the investments themselves, the minimum investment is $100,000, and then at tiers of $500,000 and $1 million or more, the preferred distribution structure gets more attractive, and that's how we structured it.
Yeah, totally makes sense.
And we are to us, it's not how quick we raise the money. Once again, we're now in a position where we are a profitable company. Our numbers and margins over the past year weren't great as we were making the investments to ramp up. We've turned the corner and are now profitable. And so it's kind of like anything. The money comes when you don't need it as much as when you need it. And so, but to that point, it puts us in a position where we can be very particular about the investors we team up with. We're looking for people who want to be partners with us. We're looking for people who would like to be part of our advisory board, and people that can help us with our goal of continuing to grow the nearshore services, to acquire and get into software as a service companies and grow that portfolio. And so we're really looking for investors that are aligned with those goals, and looking for a good team to be a part of.
It, this is just my editorial, but I found that the most valuable investor, because money's fungible, even though raising money is never easy, is the one that can not only vote with their checkbook, but get you into the next company in a business development way, right? So it's, aside from advisory board or board member type stuff, business development, money, investors is always a nice thing.
It has, and as I mentioned with numerous private equity firms, when we tell them we're not interested in a tuck-in offer, it has led to a lot of business development activities. And so there is a lot of different ways to have a win-win relationship, short of direct investment. So I agree with you.
So we went way over time here, but that's okay because we had a lot of questions. Is there anything you want to make sure you cover before we wrap up, Steve?
Arthur, I appreciate your time, everybody here on the call. I know, hopefully, if you have additional interest in learning more, I'd be more than happy to do private calls. I know we didn't get into on this very deep onto the financials, on the use of funds, on the targeted companies that we have, and that's something in one-on-one meetings we'd be honored to go through further. Like I said, our due diligence room is immaculate. We already have together anything you can ask for, and that was part of just our structure and style of rolling this out the right way. So we'd be honored to have additional conversations. And Arthur, I really appreciate your time and opening us up to your network.
No, it's super cool. Really happy to do it. And of course, from the perspective of who we know jointly, is indeed my pleasure, and really well done of tightening this ship up, Steve.
Thank you very much. I appreciate it.
So again, thank you all for being here today. I will make sure that everybody on the call and who had registered will be in touch and directly with Steve, and you're welcome to do that. And as I mentioned, the recording will be on Family Office Insight's YouTube channel if you care to share it with anybody or review it. And as I always say, thank you for spending the only thing you can't make more of, and that's your time with us today. Till next time. Thank you, Steve.
Thanks, everybody.
Take care.